Hey there, small business owners. Welcome to the Tax Talk Podcast, the premier business podcast aimed at unlocking your unique potential. I'm your host, Jared Pilon, and I help my clients do three things: find common sense business solutions, minimize tax and maximize profits, and preserve your legacy. Each podcast episode will dig deep into an everyday problem that small business owners face, and most importantly, explore solutions to these problems. You ready to solve problems? Are you ready to keep more of your hard-earned wealth? And are you ready to preserve your legacy? Let's get to it. Welcome to episode 9 of the Tax Talk Podcast. Jared Pilon here as usual. Today we've got a special episode carrying on with the probate planning questions, and I'm bringing on a special guest today, my friend Alfred, and he's got a number of questions along the probate line that he would like to have addressed, so I figured why not bring him on and get these questions answered. Yes, Jared, thank you for having me on the show today. I do have a number of questions regarding probate planning, specifically related to tax and trust planning that I'm hoping that you can help me out with today. So my first question relates to me transferring a property to an adult child of mine and also stipulating in writing that the child is a true owner of the property. Am I, exposing myself to any potential tax issues down the road? Great question, Alfred. Yes, you can definitely expect to see some potential tax implications if you structure your assets in this manner. By adding your adult child as a joint owner with sole survivorship and indicating that they are a true owner of the property, the asset is going to pass to them directly upon your passing. At this juncture, the adult child is going to receive that asset directly, and the estate will then be liable for the taxes that arise on the deemed disposition of that asset. What could happen at that juncture is the estate is going to be forced to pay for the taxes directly attributed to that asset, and it is going to create a bit of an unequal distribution of your overall estate, as one child is able to inherit that asset directly while a potential other child is forced to pay for that tax liability, although they have no access to that particular asset. Great, Jared. Thank you for letting me know that. That is definitely useful in my planning purposes going forward. So, with that being said, is there actually a way to solve this problem? Can I still get this asset to this child without creating this uneven distribution of my overall estate? Another great question, Alfred. There is one potential way to avoid this inequality in your estate distribution, and that would be leaving the asset within your estate and within the will, doing what is called a specific bequest to the adult child that you're hoping to transfer that particular asset to. Now, care should be taken when you're doing this type of planning, because you don't want to run the risk of disinheriting the child from the estate overall. And by this we mean if you happen to put this request in the will to have that asset distributed to the child, and then you subsequently sell that asset for whatever reason, they are going to be left basically out of the estate because that request is not being able to be fulfilled down the road. Excellent information, Jared. Thank you very much for that. I'll be sure to keep that in mind as I plan to handle this asset going forward. I presume it would probably make sense to obviously speak with my children to ensure that if I'm wanting to give them a vacation property, that it's something that they actually want. Maybe I'm just presuming that they would like this asset, and maybe the one that I think wants it doesn't even want it. Does that kind of make sense? Another great point, Alfred. Definitely want to take this into consideration, and we find that as you go through the will and estate planning process, you have these upfront discussions with your children and other beneficiaries that you can determine what it is that they actually value. Sometimes kids, might not care to inherit that vacation property. Maybe it's just a particular heirloom that they are really dead set on, receiving after you pass away. So having this discussion early on is a great way to ensure that there's no surprises and no hard feelings down the road when the estate eventually passes. Excellent, Jared. Next, I have a couple of questions regarding trusts. If I transfer a particular asset to an adult child via a joint ownership arrangement, am I missing out on any potential trust planning opportunities? Great question, Alfred. So I'll give you a couple examples off the top of my head where you might lose out on the ability to take advantage of a trust if you directly transfer property via a joint ownership declaration. One of which would be if you have a minor beneficiary involved in your estate. Setting up a trust would allow the assets to be held in trust until a particular point in time that you deem appropriate for that particular beneficiary to eventually take ownership. Additionally, this would protect the overall estate by not allowing a provincial trustee to be interjected into your estate. Rather, you could appoint a particular trustee that you trust and have confidence in to be able to manage the overall estate for your assets. Additionally, these are very useful in blended family situations. So say, for instance, you have a spouse who passes away, you remarry, and there are some concerns that the kids from your first marriage are not ultimately going to get the assets that you own. So what can be done is a trust can be set up to the benefit of the new spouse. He or she can then use those assets during his or her lifetime, and then ultimately when the second spouse passes away, the assets can then revert back to the children of the first spouse, allowing them to carry those assets on down to what are ultimately your grandchildren. And this ensures that the second spouse isn't just taking the assets and distributing them as he or she sees fit. Excellent information, Jared. Very much appreciate that on the trust planning options. Are there any other areas that I could look at? Potential income splitting, or what happens if I have a beneficiary that is disabled? Are there anything to consider at that juncture? Another great point there, Alfred. Yes, there are definitely aspects to consider as far as trusts and income splitting with lower income beneficiaries. The trust could be used to pay out income to these individuals, but care must definitely be taken to ensure that this type of planning, it addresses the entire family situation, that the tax bill is being lowered as a family unit, and of course legislation such as tax on split income and other relevant legislation should definitely be taken into consideration before implementing this type of trust planning. Regarding your question on beneficiaries with disabilities, yes, another great planning tool that can be used to preserve the estate assets for that disabled beneficiary. And this would be done through what is called a Henson Trust. These aren't available in all provinces throughout Canada. So ensure you're speaking with a qualified, a lawyer, an accountant, to ensure that this planning makes sense and is actually feasible within your jurisdiction prior to going down the path of setting up that trust yourself. So, in conclusion, we can see that probate planning done in a silo can have a lot of negative tax implications, equalization, and distribution issues. So it's important to think outside that box, plan for the estate as a whole, and ensure that you are preserving your legacy and protecting your family relationships going forward. So, for the Tax Talk Podcast, Jared Pilon, I just want to say thanks again to my guest Alfred for coming on to the show today. Lots of great questions and a good discussion back and forth. And we look forward to seeing you on the next episode. Take care. Thanks for having me on the Tax Talk Podcast, Jared. Really appreciated the information and the tips as far as estate planning, tax, trust planning, all of it. Really great stuff. Look forward to be back on the show again soon.